All right, so joining us now from Lagos, we turn our attention now to the Skye Shelter Fund and results out from this company earlier this week showing a turnover increased by 28%, profit before and after tax up 43% and fixed assets increasing by 25%. Joining us now is Patrick Ilodianya, a fund manager at Skye Shelter Fund. Thank you so much, Patrick, for your time today. We're seeing a nice increase there for turnover, up 28% to 161 million naira. Give us the story behind the numbers, given the fact that since its inception, the fund has been doing very well, despite the fact that we saw a credit crunch on a global level, we saw property prices coming off, and we saw a banking crisis ensuing in Nigeria.
Thank you very much for having me, Elaine. With regards to the growth of the price on the net profit from the Skye Shelter Fund, the major result and the major reason for that has been partly 8% has been from the basically it consists of two components, 80% from the prices and sales of property and 20% from rental income. And a lot of the property we're selling currently is from property we bought 2008 and towards the ending of 2009. So that means even towards the worst parts of the Nigerian financial crisis that was last year, there were still some good deals to pick up. We picked up some of those good deals, and we've actually managed to exit some of those good deals, and we're sort of making good numbers right now.
As I said, profit before and after tax up 43%, a rise in profit margins, and obviously you're talking about very good deals there. And some of the deals that we saw last year, we know that the Makido Royal Estate in Abuja, that was quite a great acquisition for you. Tell us about these great deals, where you've been buying property and whether it's to do with rental or commercial.
Yeah, last year I guess there were a lot of fire sales, and basically most of the properties we do come from residential. As of last year, it was mainly residential. This year we're doing commercial, talking of offices and shops. But basically from last year, a lot of it was from the residential real estate, and we were able to get better margins, because don't forget that we bought a lot of that property in 2008, and we bought like Masido. There was some real estate development done by the FCDA in Abuja called Kabusa Gardens, and there's some other ones in Lekki Phase 3, Victory Park. We are able to exit some of these properties, and also some in highbrow Ikoyi. So because of our ability to exit them at an improved margins, we'll sort of be able to declare higher and better numbers. And also because, you know, the cost structure of the fund is such that our cost does not increase. So even going forward and from the past, we expect the cost to remain stable. So any additional income goes straight to the bottom line.
Right, net asset value of the fund sitting at 2.5 billion naira. Cash holding down 41% to 556 million naira. Give us an indication of what's happening in terms of asset allocation across the various segments of the property market.
For us, we have a sort of a conservative view on real estate, because real estate, as you know, like other forms of investment, you have to be quite careful in it, and you have to determine how you want to play in it. Basically, what we have done is that we've allocated about 75% of our entire funds are into direct real estate investment, while the balance of 25% are into real estate related investments. Out of that 75%, maybe 60% or 60% of our property investments are into residential real estate, while 20% goes to hotels and hospitality industry, then the balance of 20% goes to commercial real estate. And so that is the planned asset allocation. For the whole of a bulk of 2009, most of that asset allocation was into residential. In 2010, we've begun to diversify into both commercial and hospitality. Currently. Well, so that's an idea.
Okay, well, looking at the cash flow, as I said, your cash holding is down quite significantly. In your previous results, you were talking about good cash flow coming through because you were going into those high-yielding property investments. How do you see that playing out for the rest of 2010? Do you expect your cash position to turn around?
Because there are so many fantastic deals on ground right now, we're having to, there are so many deals that you really can't refuse. So that's why we're actually coming to the market again to raise an additional 3 billion and later on to raise an additional 5 billion to increase the cash flow, because right now we believe that late last year, we felt that that was the time to hold cash, to take advantage of all the property prices and depressed prices. But right now, we've sort of changed our investment outlook, and we believe that this is the time to actually expend your cash. With interest rates at record lows of 3, 4, 5%, government treasury bills at extremely low, and with an outlook of expected inflation, we believe that this is the worst time to hold cash. That is part of the reason why we plan to raise additional funds. And when we do that, we'll be able to take advantage of a lot of fantastic investments here. But as to the cash generation ability of our investments, we think they're sort of very good, because when the market went down, what happened was that there was a preference, or there was a shift in demand from buying properties to renting properties. So we've not seen any decline in any of the rentals we received from any of our properties. In fact, we've seen an appreciation in our rental values on all our properties. So we expect the cash flows to still be positive, but we plan to increase more, or we plan to get more cash to take.
Well, Patrick, that's an interesting notion. I mean, you want to come to the market and raise more capital, but also just looking at what is playing out in Nigeria, and in terms of trying to get the credit flowing through to the people on the ground as well. We also saw a lot of audits coming through for the banks in Nigeria. Risk appetite, sometimes we see it waning somewhat. Are you concerned about that? Because obviously you do foresee quite a strong demand for property in Nigeria, and thus a strong demand for your fund. But you also have to take into consideration the macroeconomic environment that is playing out as well.
Yes, fantastic. Basically, what you said is that a lot of the banks are not lending. And the truth is that there's a housing gap in Nigeria currently, 17 million, if you're talking to, depending on who you're talking to, between 12 and 17 million. And right now, the only funding a lot of these agents have, or a lot of these developers have, is funding from institutions like ours, Real Estate Investment Trust, who are willing to give them funds, and because we understand the dynamics. And that's why a lot of what we do is deep into research. We are focused on middle income houses, even though there have been a dip in the real estate segment,
Patrick,
mostly luxury.
Unfortunately, we're almost running out of time. I've got one more question before I have to say goodbye. What is your view on the price of the fund on the NSE, given the fact that it's very close to your net nominal value?
I think the price is grossly undervalued. Right now, we're trading at a PE value of 8, and currently price to book like 80% of the book value. So I think it's grossly undervalued. The net asset value is about 130 naira, when it's trading about 100 naira. So we think there's a huge potential upside. And when we pay our final dividend of 3 naira, we expect the pension fund administrators to be able to invest in the fund.